Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick. Big day in Detroit. It is Tigers opening day, but a bigger day in the markets. We have Tesla. I guess we find out why they were waiting so long to release their Q1 deliveries, because they were week. So we'll talk about that. We'll talk about earnings from STZ, Constellation Brands. We have a number of interesting analyst ratings upgrades and downgrades this morning. And we've got more on my list, but those are the headlines right there. So we'll also get to your questions from our chat. And Marc Chaikin is our guest today. He would join us at 8:15. Joel, what's the word here in the overnight session?
A little bit of red here, down 2 1/4 at 28.7750. We snuck up to 28.83 in the overnight session. Just keeping an eye on the high close of the rebound. That would be yesterday's close, 28.7975. Yesterday's high up at 89 1/4. There's one target. On the downside, you have real good support right in the 28.66 area. You had Wednesday's low at 65 1/4. Tuesday's close right there. So I'm just expecting perhaps just a trading range day ahead of the jobs number. Crude up 26 cents at 62.72, pressing up against that pair of highs we had, 62.98 so far has been the high of the rebound. You have gold in the red by a couple bucks, 12.9330. Silver just hanging out at $15, down 9.2 cents. And Bitcoin giving a little back here, hit 52.60 overnight. But now back under 5,000. This is the Bitcoin futures, down 227.50 at 4,990. And I'm looking at this, and the volume is 4,000 shares. That's huge.
What's the Bitcoin? Where is it right now?
The futures is at 4,990.
We sold off a bet, last night there.
Yes.
Because we were up at like 53, 5,400, were we not?
Well, in the futures, you got the 52.60. So
we're off a little bit there. I just wondered because Riot Blockchain was trading up and now it's trading down. So I was assuming that's probably something to do with the Bitcoin trade.
Yeah, I mean, over 5K, couple targets. So now back under it. We'll see. We will see if we get a little bit of a pullback. So Triple D, you must have been on a swivel last night. You must have been looking all. What did you look at? I mean, did you look at Tesla? Did you look at Constellation Brands? What was
there's all kinds of stuff going on last night. But before last night's trade started, I'm sitting there at 350 and analyzing Tesla, and I'm like, man, he's so slow getting these numbers out. Remember last time? Wasn't it like last quarter? And they came like 2 days before everybody expected them to come. And the sales were really good, or maybe it was the quarter before. But I remember them getting out there good sales, and they came really good. I'm like, they're waiting till the last minute. These have got to be bad. So I talked myself into selling half of my long-term Tesla position, which was a good move. I wish I would have sold it all, though. So I sold half of it yesterday at 291, right before the close. I think 292, actually. I think my price was around 292. And coming this morning, it's 262. So regretting not selling at all. But I said I would hold some. So now I had a half a size position Tesla. Now I got a quarter size of a normal position. So it's very small. I think it's honestly out of the 100 stocks I have, and I think I do roughly have 100 stocks in my long-term portfolio. I think it's my smallest position. And it's smaller this morning because it's obviously getting the beats here, down 10%. Give us these disappointing numbers for Tesla, Mr. Israel. I'm kind of happy about it. At the same time, I'm still losing a little bit of money, so I'm kind of sad about it as well.
Yeah, worse than what was being expected from them. I guess that's why they waited until like 8 p.m. last night to
until the end.
They
were coming. They waited until
9 p.m. last night. So they delivered 77,000 total vehicles last quarter, the majority of which were Model 3. That number was down about 30% month I guess month over month or quarter over quarter there. But worse than what analysts were expecting pretty much across the board for total deliveries, for Model 3 deliveries, for Model 3 is the biggest segment there. So just light across the board, and they also they reaffirmed their prior guidance of what they would deliver this year of 360 to 400,000 cars.
So first level, I think obviously we're going to challenge the 254.46 low that we set a week and a half ago. So can they take that out? If they do, there is some major support. Then you're at that whole 250 level. So you're coming into a major support area. That's the good news. The bad news is you're coming at it hard. And the bad news is you're coming at it on disappointing numbers. And I mean, this is not good news all around here. I'm glad I sold half the position. Like I said, I wish I would have sold it all. But we'll ride out a little bit of this.
All right. Well, have no fear. Well, first we'll do the technicals here, and we're trading on the lows of the pre-market session, 262, 74. Not much of a bounce. Going to the dailies here, you just came off a low at 254.46. So there's a couple levels to come in. There's a couple. That's really the bogey here, right? Because we are trading down. We are through the March 26 low of 264.43. So I don't know, Dennis, I don't know if we're going to get down to that 255 area today. Maybe this will be a little bit encouraging. Gene wrote about it, Gene Munster, Loop Ventures, and he said as expected, logistic difficulties in China and Europe caused a miss on deliveries. And he says, but have no fear. It's going to have little impact on Tesla's long-term outlook. He expected 2019 to be a bumpy year. The bumpiness includes continuing to work through production and logistics challenges and finding a baseline for demand as the initial rush of Model 3 buyers subsides.
While Gene remains a Tesla bull.
Yes, that's what I don't really need her anymore. He is sticky as keeping his bull hat on.
And that's important too for me because I think Gene knows a lot more about this stuff than I do. So I don't know. Am I coming in and rebuying the shares that I just sold? We got down to 250. I might be interested. I think we've come far enough now that we're going to take out those lows. Like, why not? Why not over the? Now, I'm not saying we're going to do it today, but why not over the next day or two? Take out the 254 low, hit a few stops down there. Maybe we take out 245, and the bears really start to come out. I mean, the bears are going to be out on the Twitter anyways. Everybody loves or hates the stock. There's no in between. So you're going to hear a lot of bearish talk here today. I think why not? Maybe 244 you take out the next week or two. But I don't know if I'm saying this is the end of the story. I think I'm going to stick with Gene. I think long term, I think the stock will turn around here again. But let's trigger a few stops before us. I think you might.
This is a big. I mean, this is one of the biggest down days it's had in a while. Down 30, yeah, and it's traded 1 million shares so far. So the tug of war in Tesla continues. I don't know if it's really given much of a boost to the U.S. autos. Nah. I see GM. That looks like an odd lot traded there. So let's go to the opposite end of Tesla and take a look at NIO before we do the earnings. I think that got an upgrade today, correct? 2
upgrades here this morning. Getting a little bit of a lift. I think Tesla would weigh on this if we didn't get the upgrades. We have 2 upgrades today on NIO, one from Bank of America and one to Citigroup. Citigroup upgrading it to buy. I think I saw a 620 price target, but I don't know. The stock's just been kind of just hanging out. I mean, it's been an ugly month for it. I mean, it's been cut in half, basically 2-for-1 split, although you didn't get the extra shares. 547. I mean, if you're leaning on a level, 490, it's going to be up here today with the upgrades trading up 3%, but hard to get excited about this stock chart. This is just not the kind of chart that I like to buy.
And it's opening up into a pair of highs from the last 2 sessions, 561, 558. So right there, you need to get that first to challenge the $6 area. Also, Musk is going to be his contempt of court ruling is this afternoon too.
No, not the ruling, not the ruling, the hearing, not the ruling.
The hearing.
Yeah.
Yeah, not the report. There's somebody different. Yeah, but that's that his battle with the SEC is adding to it. But back to NIO, you got to take out that double top 560 to challenge the $6 area.
jump over just to the other earnings stock. And I tell you, it was like the fade trade last night. And this would have been in the first one here. STZ Constellation Brands comes out last night, and they said they were selling a bunch of brands. I think there was 30 in total for, I believe, and you can correct me if I'm wrong here, Spencer, because I'm going from my memory, which is actually working pretty well here this morning. 1.7 billion, I believe, is what it was.
Very good.
They hit the stock down to the 173 handle on this, and there was just, there's not a lot of liquidity in the books. So I was looking at this and I'm like, holy cow, they're gonna head down $6 on this. And before I could even think about buying it, they got it at 174 bid, 175 bid, 177 bid, all the way back up to 179, literally 20 minutes later. So if you were so inclined to buy the dip last night as it was dipping, you were well rewarded, and you're being rewarded even more here this morning because they came out with earnings this morning, and the numbers were obviously good.
Yeah, last night they said they're basically going to reorganize their entire wine and spirits portfolio. So very good, Dennis. They are selling about 30 brands for about $1.7 billion. That was yesterday. Today they had their earnings, like you mentioned, Q4 adjusted EPS $1.84 versus $1.72. Estimate sales of 1.79 versus 1.73 billion dollars. So that's an EPS and the sales beat for Constellation in the fourth quarter. Their guidance that they gave for the fiscal year, around $8.50 for the EPS.
Make money, man. They make money, STZ. But I guess when you think $185 stock, so $8, I guess still trade 20 times or even more than that. I don't know. Give us some technicals here, Joel. We're breaking out. So wild range, obviously. We got down to 173. Now we're up at 185. I mean, now you start to open up, actually. I kind of see open room to 190, but it's difficult here because you got such an expanded range overnight that this thing could really go anywhere.
Yeah, that's correct. 187.13 was your December 13th high. Then you had another high at 191.04. That was the previous day. Pre-market high, 187.89. That's in the area of that December high. Really, this one, I mean, I would just kind of look at this one from a longer term perspective, and I'd wait to see it come back down to 180, maybe fill that gap from yesterday. I doubt, who knows what's going to happen today, but that was kind of the top of the range, 179, 77, 180. So I like to see it come back down there. I just, here, you're buying it here, where's your out, Yeah, I mean, the risk reward on this one, not looking too good, but wow, it's 173 to 187, just a tidy 4-point pre-market and after hours range.
Boeing too, the trade was on in that one because this came out with some news after the bell and ran up to the 399 handle, almost kissed 400. Then we had the Ethiopia report this morning, which took all of those gains away, and the stock action went red. It is back in the green, up $3. So tug of war here on Boeing. Spencer, give us the details on those two headlines.
Yeah, we'll do this quick, and then we'll grab Marc Chaikin. But yeah, yesterday,
Boeing, forget about Marc.
That's okay. Yesterday, Boeing came out and said that their CEO, among others, flew in the updated 737 MAX and did all was well. Did not no issues there. And then we have this Ethiopia report that I don't even think it mentioned Boeing as being at fault for anything. It's that the plane wasn't good flying condition.
Yeah. Anyways, in any regard here, look at the expanded range here after hours in this one too. So all the way up to 399, then all the way down to 381. So you're talking about an 18-point range here after hours. Joe, crazy.
Yeah, 402.67 was a high of the rebound, and that was the day after the incident. 399.50. You got to figure 400, big psychological.
Yeah, if you were sitting out there last night after hours at 399 and you got short, congratulations. Big level 400. I thought about it. I was like, they're going to drive us to 400 is what I was thinking. I'm like, man, you get all the way up there, it's got to be some resistance up to 400. Well, I was only up there for a few seconds. It got near the 400, not quite to it, and then started to peel back. And I mean, literally 2 minutes later, it was 395. So you kind of had to have your order out there in the low 399s to get done because you weren't going to get done at 400 on the short.
All right, I am dialing up Marc Chaikin right now, founder of Chaikin Analytics, joins us every other Thursday, longtime veteran in the markets, creator of his own
Marc Chaikin
indicators. Marc, how's it going this morning?
It's going very well, Spencer.
Were you waiting until 9 p.m. last night to see those Tesla deliveries, and you're up first thing this morning to short it, or no? Or you already?
Well, you you'd be shorting it down 10%,
Yeah.
as I'm sure you've been talking about.
Yes.
So the opportunity, it's interesting. We came in this morning with an overbought sell, meaning that Tesla had rallied up and gotten overbought short term, and our Chaikin power gauge rating is bearish, but no opportunity to actually put the short on.
Unless you just had the guts beforehand. I was actually nervous about these numbers, and I have a long-term position in Tesla. I sold half of it ahead of the numbers. The reason I sold half of it was, and I'd planned on holding this, but I just got myself talked out of it. The reason was that they took so long to get those numbers out of there. And if you think about like a quarter ago, I think it was 2 quarters ago, when they had the really good numbers, they got them out there like 2 days before everybody expected. And here he is, like waiting to the last second to get these numbers out. I'm like, they can't be good, or they would have released them a long time ago. So, I mean, if you were making that call just on that, you'd be making 10% here this morning. So obviously, I wish I would have sold it all. I wish I would have went short, but it had me nervous. And I don't know if I had a lot of traders nervous because they're trading up, but they would have been rewarded this morning if you were reading the tea leaves.
Indeed. Well, I've had a long-term bearish view on Tesla, and competition is heating up. So we'll see what the intersection of running out of cash, competition, and ramp up of production really is. But I'm not positive about Tesla at all.
All right, Mark. What is on your radar this morning? You're not positive on Tesla. What are you feeling good about right now?
Feeling good about the market in general and large caps, particularly with an emphasis on tech. So software and services and semiconductors have really been off the charts. They've led the rally here in 2019. And since we think the market's going to move higher up toward the 3,000 level sometime this year, this is where you go. You go where the leaders are.
You want to get what name specifically?
Well, in semiconductors, you're talking about AMAT, Micron, and the big dog Intel. But in our work, not NVIDIA. NVIDIA is neutral right now. But AMAT, Micron, and Intel have very bullish power gauge ratings. And I think these stocks on dips, again, only on dips. You don't have to reach. Stocks pull back a bit and you can buy them. I think this is where you're going to make some money here for the balance of the second quarter.
Well, it's good timing here this morning to be talking about that, because we've got Micron getting a downgrade this morning at Morgan Stanley, and that actually is to underweight. And the stock is trading down significantly here. And if you're looking at the semis, most of them are trading in the red. And I'm pretty sure it's this Micron downgrade that has spooked them all. I mean, the market's slightly up, but Micron's down 3.6%. If you're going to the other ones, AMD is trading down 1% here now. It's been on a heck of a run here. Applied Materials is trading the red. All of them are trading the red, and it's got to be the Micron downgrade that spooked the whole sector to a certain extent. So you'd be potentially buying this pullback here in Micron this morning.
Absolutely. As close as you can to the 41 level, but you want to buy the pullbacks. Now, money flow, Chaikin money flow had been negative on this double top that we made here at the 44 level over the past couple of weeks. So clearly some people were selling into the strength, and Morgan Stanley is just now, sort of reflecting what some big institutions might be thinking about the stock. But I got to go with the technical pattern and the Chaikin power gauge, which is bullish on all three of these stocks.
When you say the power gauge is bullish or bearish on any name, what does that mean? What makes up that rating?
We've got 20 factors.
Secret sauce.
Yeah, well, no, it's not so secret. You know that. We're talking about 85% fundamental and 15% technical. So we're looking at financial metrics. If we look at Micron, free cash flow to market cap, very positive. Price to sales, very positive. Return on equity, positive. So these are the value metrics that the value investors look at. And we look at earnings growth and projected PE ratio, and that's basically a flavor of what's in there, plus some sentiment indicators like short sales and insider buying.
All right.
Mark, let's just jump over to other stocks. And I mean, we've had, not just the semis, but a lot of tech stocks really strong. The cloud stocks have been very strong here too. Salesforce.com still near the highs here, but you can go into all of these stocks like Splunk. They've all come off the highs to a certain extent, but they're showing life here again. What do you think of the cloud stocks?
I like them in general long term. Some of them have seen the power gauge ratings go neutral for reasons you've just sort of articulated. They've had a big run, and from a valuation point of view, they're stretched. What's not coming down at all are the software stocks. I guess it was almost 3 months ago, we recommended Cadence in my weekly market letter, which makes semiconductor software for manufacturers. And that stock was 46. It's now trading at 66. And there's never been a pullback of more than 2 days or 3 days in the stock. So I think that software is viewed as a high growth opportunity in, what's perceived right now to be a low growth market, with first quarter earnings expected to be down year over year, and people a little bit uncertain about the balance of the year. Of course, that's part of the reason that the market keeps going higher, because we're climbing a wall, in this case, of economic uncertainty. But I think the software stocks can be bought. I love the cloud stocks long term, some more than others. Obviously, Salesforce, from our point of view, is a stock we've been talking about. And here again, the power gauge had been bullish in late December. Now it's neutral. This is a stock I want to own long term, and you just got to buy it on weakness. You've had 2 dips here in the last month, down to the 150 level. And I think you want to try and buy it between 150 and 152, which means you've got to be patient.
What about Square? And because this is one that's been sleepy here for a couple of months. We had a good run in January from 50 up to the 75, and we've just been in the consolidation station here for 2 months. What's your power, or what are your indicators saying on Square?
The power gauge is bearish, has been bearish since October, when the stock basically spiked down to the 70 level, 65, 70. My view of things is that if you can't put together strong stock market performance in a rally like we've just seen, that something is not right. And Square falls into that category. Now, the power gauge happens to be bearish, so I don't want to go near this name. But when you think about it, we've just had a rally of 22, 23% from the December lows of 2350 on the S&P. Stocks show their true character in a rally. If you can't be making new highs, or at least new recovery highs here in this market, then something's not right.
Mark, do you have any thoughts on 5G names? I saw that Verizon had launched a 5G service in parts of the Midwest, Chicago, Minneapolis. Any insight into 5G?
Well, the AT&T has a bullish rating in our model, and I think if you've got to pick between Verizon and AT&T, AT&T has all the jewels. Now, they've screwed up a lot of mergers in their time, so I don't know if this is going to be another instance of that. But basically, T-Mobile, AT&T, not Verizon in our work, is where to go. And interestingly, Verizon sort of had almost a lead balloon reaction to yesterday's announcement. Smart money knows this stuff is coming. It's not a big surprise.
Would be remiss if I didn't get your thoughts on the Lyft IPO. I'm sure you, like most people, you probably weren't buying it the day of, since I think we discussed on the show. Typically, most IPOs do trade below their IPO price at some point in the coming or in the first 6 months or so, first year of trading. But just give us your thoughts on just the reaction to this thing. It was oversubscribed, reportedly massively oversubscribed. It's down, it's down $20 since then, or I don't even know at this point. But talk to us about what do you think the reaction of this IPO kind of says about the sentiment towards these high growth names in general?
The initial reaction, which was extremely positive, was a little bit of a warning sign for me. So I'm actually glad that it sold off, because we haven't had euphoria in this market that you can really point to. So no euphoria, unlikely to get a top based on overvaluations, and it sure looked like Lyft was going to start the euphoria train. But it's a bit sobering now for the IPOs that are going to follow, like Uber and WeWorks and some of these other names that are due out. But basically, I referred to Lyft in the weekly letter before the selling came in on Monday. Over 900 million in losses, $22 billion of market cap. This is insanity. And there was an interesting article that showed that millennials were buying Lyft in the aftermarket. And as you probably know, millennials are not attracted to the stock market. They're not even attracted to checking accounts. They just keep their money in cash.
Oh, that's not. Come on, Mark. That's not true. That's not true.
Oh, they don't talk stocks. Come on, you know.
Spencer does.
We have bank accounts.
When's the last time you went to a bar, Spencer, and someone said, "What's your favorite stock?" It just doesn't happen anymore. If it's happening to you, then I'm not going to the right bars. But and I think it's good that millennials, you know, are interested in the stock market. But in the case of Lyft, it's for the wrong reasons, in my view. And they love Lyft. They like Lyft. They don't like Uber. So it made sense. You know, Uber is viewed as the evil empire in ride sharing, and Lyft is viewed as, you know, the benevolent dictator. But the valuations are way too high. But this is good for the market because it probably means that underwriters for the next tranche of these, and there are a lot of them, there's probably somewhere between 5 and 15 unicorns, you know, the billion-dollar private valuation companies that are due to go public here. And you don't want to see them coming to market at excessive prices and then tanking. But Lyft, I wouldn't touch it. You know, there's so much competition here. They call it a duopoly, but anybody can get into this business. They happen to be well entrenched right now with only one big competitor, but that can change. This is just a fleet of taxi cabs. You know, taxi cab licenses used to be more than $1 million a piece in New York City. Now, you know, Michael Cohen can't sell his 50 or 100 taxis at any price. And Lyft is just a glorified taxi company. Now, granted, it suits the millennial lifestyle. It suits my lifestyle. I'm in Uber twice a day. But that doesn't mean a competitor can't come in. And at those valuations with no foreseeable bottom line profits, I don't know why you'd want to go near the stock.
Mark, I got to get your take here on the financials here. We can talk individual stocks or just talk the XLF. I mean, they just a couple of weeks ago, they took these issues, this sector to the woodshed on the Fed stance here and just boom, with really no news. I mean, TLT pulling off a little bit. The financials climbed their way back, get a majority of those losses back. Now you have the jobs number here. I mean, was this just a simple rebound rally here? Give us your take on the financials.
It's all about interest rates. You had the 10-year Treasury yield bottom out just under 240 and start to move up. I think basically from the point of view of the financials, the Fed has done all the damage that it can do. In other words, by saying interest rate hikes are on hold for the balance of 2019, they did the damage. And then you had Larry Kudlow pressing the administration point of view, you know, cut rates 50 basis points. That is not going to happen. If that happened, it'd be bearish for the whole stock market because it would be sort of validation for the weak economy thesis. But I think this is all about interest rates. They bottomed out about a week and a half ago, and the XLF bottomed out. Now you've got first quarter earnings coming out next Friday, a week from tomorrow. And that's going to be sort of the moment of truth for the JP Morgans, the Bank Americas, and the Citicorps of the world. The insurance stocks have actually been doing a little bit better. And I think the insurance stocks are a better gauge of the bond market opportunities. And obviously they see good things there, but we have a bullish rating on JP Morgan. 105 is sort of the Maginot line for that. If it can get above that and stay there, it looks really good. But Citi, Bank of America, JP Morgan, if you're bottom fishing, these are stocks with bullish power gauge ratings. Citi is actually the best acting of the whole group, which means that they've sort of gotten their act together, which is a good thing because Citi is less involved with the trading book and the asset management business than JP Morgan is. So I think if you want a pure banking play, although nothing is pure in this world, Citi is the place I'd go.
All right, Marc Chaikin is the founder of Chaikin Analytics, joins us every other Thursday to give us his thoughts on the market across different sectors. Marc, as always, thanks for the insights, and we'll talk to you in a couple weeks.
Yeah, and stay bullish through the end of April. Earnings season is going to be good for stocks.
Stay bullish. All right, have a good one, Marc.
Be good, guys.
All right. Any action here, Joel? In the S&P?
No, boy, we have a really, really tight range here. I just saw the jobless claims came out, didn't really move the market. Trading mid-range on the session, only down a point. Little position squaring here. Maybe a quiet day on Wall Street ahead of the big jobs report. Dennis, those imbalances must have been fairly mixed there because nothing there.
I don't see much at all. I'm like scrambling to find anything of interest here, and I don't know. Bank of America 66,000 to sell, Citigroup 45,000 to sell, but these are all basically a non-event from imbalances. There's nothing happening here.
Okay.
Quiet morning.
Yeah.
Okay. We need a quiet morning every once in a while.
Not a quiet morning.
Take lots of tickers from you guys. So give us some tickers if you want to look at some different stocks. I'm going to throw one ticker at you first, which I thought was interesting, was Red Robin Gourmet Burgers, and that stock is trading down 2.7% in the pre-market. Spencer, what's going on here?
Couple headlines from Red Robin. They announced yesterday that their CEO is retiring, and then in the release, in the very, very last paragraph, I have it up right here actually.
Nice.
The very last paragraph of this release, they said, by the way,
read it to us.
Read you the whole thing? Okay.
Yeah, read it. It's like with 3 sentences.
Yeah, it's like two. Okay, so this is in the last paragraph.
It's in the Edgar release.
Right. Comparable restaurant revenue, so same-store sales, using constant currency rates through the first 3 periods of the fiscal first quarter ending March 24th this year have decreased 3.6%, reflecting in part the challenging weather that affected several regions of the U.S. The weather impact for these periods estimated to be 100 to 150 basis points, primarily drove sales performance below our expectations. That's from the interim CEO. So
blame it on the weather.
So they announced the CEO is retiring, and then in the very last paragraph, they buried, by the way, our comps are down 3.5%. It's the weather's fault.
Yeah. So the whole thing is about the CEO, and then right in the last paragraph, you're right, they throw in, just by the way, same store sales going to be down 3.6%. So obviously it's not good news here. Blaming it on the weather. Whatever. Remember, wasn't it like a couple years ago, Joel, and it seemed like every earnings report, everybody was blaming the weather. Do you remember that?
Yeah.
Are we going to start that again if the earnings reports are disappointing? We're going to blame it on the weather?
The weather wasn't that bad, though. I mean, it was cold.
Depends where you were.
Well,
it was cold.
So maybe that's what it was.
There's some weather. There was 2 feet of snow up in my cottage in March. So there's some snow. There was some snow in certain parts. I don't think, really where Red Robin's probably, through the U.S. I don't know if it was really, snow related here or what, but
we had the polar vortex.
So people aren't eating hamburgers because it's too cold.
We had the polar vortex, but I don't know. They've got locations in almost every state, so I'm not sure.
Dennis, what's the market in this thing? I mean, I see it's traded a few. Where's it off? Wide.
26.52 with an odd lot on ERCA, so 26.50 basically call it up to 27.80. So offer at 27.80 is not getting lifted. I mean, this is bad news. It's going to be down on this. RRGB, I think 26.50. Somebody's probably looking and saying, okay, if they knock 2 points from this, I'll buy it. I see 26.49, 26.50, 26.51. So there's a few buyers there in the 26.50 area. It's good open in the low 27s easily. And I mean, really, when you look at the chart, there isn't that much to 26. So I don't know if I'm sticking my neck out there and saying it's not going lower than that, but I will say right now, I believe this is going to open down. I think you're going to be at least in the low 27s and perhaps in the 26 handle today.
There's a pair of lows going back to March 20th and 21st at 26.75 and 26.96.
I think we challenged that today.
Okay. And then if you're looking for more on the downside here, the low in December, on December 26th, you hit 25.46. That was a recent low of the move. I don't know if it has enough gas to get there today. Not seeing a lot of volume trading as of yet, but
it doesn't trade a lot though, and it's thin.
Yeah.
These thinner stocks you got to watch. They can wash out in a hurry. This could be down 5-6% like nothing.
Okay.
So, and that's always something to consider, especially pre-market trading. But I mean, once the regular session starts, I mean, what's Red Robin trade? How many shares that trade like yesterday?
Yeah, sure. 168,000.
That's on a regular trading day, 168,000. You get bad news. This thing is thin. You can see this thing
really
6-7% easily. Easily move 6-7%. So I'm not saying it's going to do it, but it's not good news. I think you can see this in the 26 handle today.
Yeah.
The person saw 27.80. I think they're correct. Nobody's lifting them though. So good luck getting that sale off.
Boom. Can you check the book here? JV Spec made a observation here. T at 32.
Oh, it's huge. I'm short off of it, so just day trading, but I am short AT&T because I know there's a huge seller there at 32, so I'm leaning on it. 328,000 shares of AT&T at 32. So now the question though comes, has a running start out of here, Joel? So it could take it out regular session. I would think 0 chance, unless it comes out with news in the next hour. I would say almost 0 chance it opens over 32. That's why I shorted last night when it got up to 31.99. I believe I shorted.
Good for you.
So
good for you.
Yeah, just day trade overnight. I'm leaning on the 32. So if it takes a 32, I'll get out. But I'm still leaning there. I think it's getting a running start at it. So I think it could take it out today. So I'd be very cautious putting this on in the regular session. Pre-market's a different story, but we also have 100,000 shares to buy, 96,000. So it's going to push it at it. Probably going to open near 32. I think it could take it out today, and then it would be a breakout.
Constellation Brands. Don't take your eye off it if you're trading this one.
Look at this thing. It's wild, man. Wild. We were just talking. The fade trade is on right now. You fade that move. You're buying 173, 174 last night. You're raking it in. You sell 185. You're raking it in. Things back to scratch. I mean, but this has not been a scratch stock. There's been a lot of wild movement here. So the fade trade.
All right. Quick question. You get your imbalances from the Ready platform, right? Is there other? Yep.
Goldman's old platform, Ready Plus. But you can get these. I know Interactive Brokers has the feed. So there are some retail platforms that offer this feed. So if you call your broker, ask for the imbalance feed. They come out at 8:30 in the morning for the pre-market ones, and they keep continuously updating until 9:30. NASDAQ ones do not come out until 9:28. So you only have 2 minutes before to really, once you get the imbalance data from the NASDAQ, it's only 2 minutes before the open. So, and NASDAQ closes it a little bit more too than the NYSE. NYSE will continue to accept orders, where NASDAQ, if you want to participate in the opening print, you can't be sending those orders past 9:28. Now there is some market maker exemptions in there, so you will see some things change there. But for the most part, your regular Joe cannot send an opening order on NASDAQ past 9:28, where New York will take them right until the stock opens, even if it's after 9:30. So a little bit different mechanics, but I think the pre-market ones have a lot of relevance. I know people don't look at this feed anymore. They think it doesn't have any relevance. The closing imbalances don't have that much relevance anymore, except on the 3 days that I always say: third Friday of the month, end of the quarter, and what's the other one I say? Third Friday, end of the quarter, and end of the month. Those are the days where closing imbalances do have relevance. For the most part, a lot of times they don't move the stocks very much at the close. Now, the opening ones I think do, because the volumes are a lot less at the open. You get a big buyer at the open and can push the price too high. You get a big seller at the open and can push the price too low. So often I look at these as, fading opportunities. When I see a huge seller, I might, or maybe it's got a huge selling imbalance and maybe the thing's trading up, and maybe I'm going to play it that way too. Lots of different angles to play these things.
Okay. All right. Just coming out of the chat here. Let's check NVDA. NVIDIA had a nice rally. Haven't looked at this chart in a while. Not sure if the downgrade is weighing on it at all here.
Change in NVIDIA, is there?
No. I meant the Micron one.
The Micron down.
Yeah.
It is. It's trading in the red. So the market's SMH is in the red here today. So, you can always look at SMH, which is obviously full of, an AMD. Micron's a big part of that too. If we just go grab it, I can get the actual component numbers. But semis are weak here this morning. And that's all because of Micron, I think.
Okay. Tight range in this yesterday. Oh, no, not really. It had a 7-point range, I guess, on the chart. 184.80. I mean, that's your area of support. That's still quite a few. We're still, $4 away from that. what was the close? High close in the move yesterday, 188.62. That's a relevant number. And then as far resistance goes, I mean, sure trying to fill that gap up at the 195.50. So it's come back a long ways here, and see if we can get back up to that magical 195.50. That was the gap down day back in November.
I'm still long NVIDIA in the long-term portfolio, and I kind of agree with Mark. I think you're getting an opportunity to maybe buy these stocks, but again, these things have really run too, so you got to be cautious even in the longer term. I mean, Micron started the year at $30, got up to almost $45 yesterday. You're talking about a 50% return in 3 months. Just overdone. Applied Materials, same story. Started the year around $30, $31, got up to almost $43 yesterday. NVIDIA has been a hell of a run too. I mean, it started the year $130, $190, 60 points, 130. Most of these are up 40 to 50% this year. These are big moves. So if you're coming in now, you're pretty late to the party. You know, I've actually lightened up a couple of these up here. I don't know if I'm going to continue to lighten up or not. I've got some exposure still to Micron, exposure to Applied Materials, exposure to NVIDIA, but they're not huge positions. I lightened up my Micron actually on the way down. I lightened it up. I lightened up my Applied Materials. I lightened up my Western Digital. I mean, they just had big moves.
All right, let's cover Facebook here. What a wild day yesterday. Was just moving higher. Some news came out intraday, knocked it down. And now right back up. We have a ratings change, correct, on Facebook?
Yep. Upgraded to buy at Guggenheim.
Big left stock going to challenge yesterday's highs. Probably it's already trading up $2.72. I would have said that was an ugly candle yesterday. It's still an ugly candle. Let's see if it can take out yesterday's high, which is 177.96. I mean, you saw a little bit of weakness here in a few stocks after they, were really breaking out in the morning. So we saw some afternoon profit taking on a lot of these, even the semi names that we just went over. Facebook has been in consolidation station for a while. It held the 160, obviously broke out yesterday. So it is breaking out, but breakouts have not worked in this market, so just be cautious. I've been very cautious on buying any breakouts. Gil Morales said this on a show about 3-4 weeks ago that he's been fading the breakouts more than playing them. I think there's something there. So if this wouldn't have the upgrade, I would actually like this for a fade trade here today. Maybe it's going to give you an opportunity. So I don't mind it. If you're looking at this and saying, I don't think it's going to take yesterday's high, you can maybe play it short into it. I still have this in my long-term portfolio though, so I'm talking against my book again, and I'm sticking with it long-term, but short-term here, it's a little bit, a little bit overdone for the last 3-4 days.
Yeah, yesterday high you have to contend with as well. Trading up though, nice pattern here, beginning some analyst love over the last couple days. 177.96 Dennis talked about as the target, and then above that your next daily high comes in the 170 handle, 180 a psychological level as well. So Facebook on the rebound here, and I don't know if I figured this out. Let's just call it 220 down. That was about 100-point move. So we're through the 50% retracement on this one. Let's see if we can, first things first, get up and take out yesterday's high. S&P is still hanging out, just down a tad. The spiders are up 40 cents here. Probably had a little bit of discrepancy there, but that will be resolved on the open. This is one of the tightest ranges we've had during the show in a long time. And
yeah, it was tight last night too, Joel. I mean, we were up. So basically, we got the pop a few minutes after the close, which is the 4 o'clock close, and we just kind of sat up there all night. I mean, look at that after hours chart. Can you bring it up on the A-mini? Because we've gone nowhere.
No.
I mean, absolutely. We come back in a couple points, went up a couple points, but it's been tight. So maybe you're right. Maybe it's ahead of the jobs numbers. It's going to be quiet here. I mean, we've still got obviously until tomorrow, but I don't know the reason. There's some individual movers, like we talked about Tesla, Boeing. But overall, this market is very quiet here this morning. Calm before the storm?
We'll see. Here's the
I want to give you some props before we just go. Lyft, LYFT, Joel Elconin comes out yesterday on the show and says, well, you got to think about the 72. That's going to be your first resistance point because that's where the IPO pricing was. You were on the money. It kissed 72 yesterday. You got it exactly on the button, the high. $72 and then pulled back off of it. So 72 is now not only resistance because of the IPO price, now you've got a high in there too. So call that major resistance for LYFT. Nice call, Mr. Elconin, predicting that.
Thank you. Upday, you had an upday in that first upday, boom, a little over $1. We'll use that 72 as resistance. The 50% move, if in fact we could get through that 72, I believe I calculated it comes in at like 76, 77 area. So that would be getting back half of the move. Volume is tapering off here from 71.5 million down to 15.6 million. So a little bit of consolidation here. So far, that's 66.10 up to 72. Nice 6-point move there. So 69. There's your area. Then what I'm looking at is the bounce off the low to that 72. So I'll take a look at this one. We get where we currently trading. Currently trading at, oh boy, right around the close. So not much going on. I see support at 69. If we get a pullback here in LYFT.
What about Comerica, a stock
Ooh.
we don't normally discuss, but appropriate since the Tiger is going to play in Comerica Park opening day today. Getting a double downgrade this morning is Comerica from Goldman Sachs and JP Morgan, both downgrading the stock to neutral. This is CMA.
Boy, oh boy. That's what they get for leaving Detroit. I don't know. This is a thin one and a double downgrade. Nice rally off the lows. Don't see it trading much here. Dennis, any take on this one? I see
offered 75.98, offered 76,
really?
Offered 76.20, offered 76.20. Yeah, it's double downgrade. It's going to get offered.
Ooh.
I mean, probably I see a double downgrade. I think down 2%. So it's down 1.1% right now, and everybody's willing to gang up on it there and sell it there. Somebody willing to bid down 75.20. But on a regional bank, double downgrade, it's worth 2%. Like I trade, this is what I specialize in trading ratings. And, I've got different, formula. I tell what, this is worth, and it's mostly in my head now because I trade them so much. But you see Comerica double downgrade, it's worth 2% minimum. So I'm not surprised that the thing's offered at 75.98. I think it gets anywhere near 75. I think you got some, you might find some buyers. That's what, when you get something, there's certain influences that ratings have. And who's downgrading now? It's just give us a broker. It's JP Morgan Goldman, right?
Yeah.
They're big too. So you got two majors downgrading it. So both to neutral though.
Yes.
Yeah, and that's one consideration is when it's to sell, like Micron is today, underweight is equivalent to sell, it's a lot more influential than to neutral. But that being said, two majors downgrading stock same day, probably going to be down 2%.
2-day low 75.53, but then it really opens up down to 73.86. So maybe split those two levels. Dennis used a psychological round number like 75. So we'll keep an eye on that. Hey, let's take a look at old Levi Strauss here. That's mentioned in the chat. Thoughts on Levi into earnings next week, and another IPO that man, it did trade back up, but too early to tell on this one. Wow, what happened?
I don't think it's
yesterday?
too early to tell. Ugly day yesterday stock, and this is one I've been expecting to roll over eventually, and I think it's going to start the rollover here now. So I'm a seller of rallies in LEVI. I'm not a believer in the long-term story here in blue jeans. I don't think it's making a comeback, and this is going to be a huge mover here. I think the stock's eventually in the teens. I don't know how the earnings. When's the earnings?
I don't have the exact date, but someone said next week.
I'll find it.
So that's a wild card. So, I don't know if I want to hold it through the report, but that's an ugly candle yesterday. So just if I'm trading ahead of the report, I think, I think you're going to find sellers all over the place here because now you're getting a stock that's almost at its lows. So now you got a lot of people from the last 6-7 days of pain here. They'll be looking to get out. I'm a seller of rallies, at least short term, maybe not holding it through the report in LEVI.
Yeah, I'm just gonna keep an eye on the $23 area. That's the 50% retracement of the move. I didn't see it sneak back over 24, going to 24.19 a couple days ago. Old time low 21.37, but someone definitely did not want to be long ahead of that report, and you also have to take it into consideration. Pretty good day in the market, and this thing had a real bad day. So things not looking too good for LEVI. Also, there's a rating on Roku, right? Did we get a
Yeah.
downgrade
Yes.
there?
Real quick,
Okay.
real quick. The Levi earnings report is next Tuesday.
So you don't have a lot of time here. That's one
I
consideration.
believe it's Tuesday morning, and yes, Roku also catching a downgrade this morning from Guggenheim. This one is to neutral.
I mean, here's a stock that got the beats on that one downgrade. It fought its way back for the last 2 weeks. Now it's stalling out at the place where it got the original downgrade from. That's not surprising. We always say price is memory, and it's stalling out, from everybody who had that before trying to get their money back. So too high, same area. Now it starts to pull back here. Resistance is fairly well defined up here at 70. Now you kind of come in the 66 handle. You're in the middle of nowhere though. So sit on hands trade for me. I think I'm a seller of it in the upper 69s. If it got down the lower 60s, I might be trading from the downside and just playing the range to a certain extent now.
Yeah, I kind of traded on the close near the low of the session, 68.27 low, 68.60. So anywhere in that, upper 67s or 68 handle, I expect to see offers. On the downside, could very well challenge your 3-day low at 65.60. Then opens up another $2 after that to 63.58. So second downgrade in a week or so, putting pressure on Roku. But I mean, it's had one hell of a run here. So little profit taking is not too bad. How about RTN for Jar Jar? We haven't talked defense stocks here quite some time. I'm not seeing much.
They all got hit yesterday.
How come?
So
Well,
that is an outside move.
they
and
had a
that
downgrade.
is- So RTN, Lockheed Martin, General Dynamics, all ugly candles yesterday. Those candles, a lot of times you see these things, they don't wash themselves out in a day. So I think it's now a fact that if this got up to like 180, I'd like to short it. So I like these from the short side here now because of that candle yesterday.
Okay. All right. Let's see.
We missed it. We missed this, and they got downgraded yesterday, Raytheon, to neutral at UBS. So I think
big area here. Let me see. Yesterday's low, 176.96. Trading up a little bit this morning, probably not on much volume, but looking at the daily chart, other lows in this area too. So really important. I think if you do take out this 177 area,
170.
Yeah, it looks pretty wide open here.
Yeah.
Yep. Keep an eye on that
I'd
one.
be very nervous if I was long this. I don't like this chart at all.
Yeah. All right. And just when we're looking at that, Northrop Grumman, NOC, just seeing the theme from yesterday and down day in that as well. They're all the same. But we'll see if we get the 2-day move in these.
Set
Tyler,
up well for the 2-day move. That would be to the short side.
Yeah. Tyler DeGrand is asking about SMAR. And what's that?
Got a rating.
What do you got for me?
Oppenheimer outperform SMAR. Been sleepy.
Yeah, look at that.
4 or 5 lows in the same area. Now you get a positive rating. It's interesting. Not trading up much, up 1.5% here. Oppenheimer is somewhat influential. So, I mean, if you pull back, I don't know if I want to chase it up and like buy 41 or anything today, but you're able to get this in the 40, 50 area. Maybe it starts to show some life. Stopping out, I would want to stop up below 39. So setting that trade up for you, maybe buying if you can get her around the 40, 50 area, give yourself $1.50 stop. If you want, do 2-to-1 risk reward that puts $3 up on 40, so 43.50 target maybe. What do you think of that setup?
Yeah, that's not bad. Unchanged would be 40.21. And real good support, Dennis identifies that $39 area. Your last 5 lows between 39.06 and 39.36. So good support. Coming on the upside, that first things first, we are trading at yesterday's high, 40.87. We are trading actually above that, 76 cents. I mean, if you're shorting this, the only thing you need to keep an eye on is, there's really not much. Your 2-day high is up at 41.46, but see if we can get this one a little bit cheaper.
I mean, the one consideration when you're trading the ratings, I'm just giving a trading tip here, is typically when a stock gets an upgrade, you're not going to get it back at settlement. I mean, usually those stocks will stay unless it's like a complete reversal, which, if it's a rating on news, but if it's just a random rating and it's pushing the stock higher, it's typically going to probably be higher on the day. So you're usually, if you're looking to buy this, you're probably not going to get it at 40.21. That's why I was like, maybe you can get at 40.50 or 40.60. Somebody maybe pays too much, maybe it dips a little bit off the open. But a lot of times what you see is these things open fairly high. They kind of dip a little bit, maybe for an hour or two, and then buyers start to emerge here again. Johnny come latelys that are looking at the ratings and wanting to come in, and a lot of times they close stronger. So if you're looking at that, I'm saying, if you're wanting to buy SMAR off this rating, I don't know if I'm paying up to 41, but I don't think you're going to get it at 40.21. I'd love to get a 40.21. I don't think you'd do it. So that's why I was like, maybe you get a chance like 40.50 or 40.60, and maybe that's where we strike on a little pullback after the open, because I think it's probably going to open around 41. Well, we don't know where it's going to open, and sometimes they open too low. Like that's another thing too, is if it opens at 40.50, I'll maybe take a shot at it. So I don't feel like I want to pay 41, but if it only opens up 30 cents on this, it is a positive rating, maybe it's interesting. Another consideration is always be careful. I know if they do reverse and starts to go red on the day, I probably wouldn't want to own it. So this started going down and starting to actually going to the red, and I was trading it for a rating. I would say I've missed something, or the markets is not liking this, and I probably wouldn't want to own it. So when I'm playing an upgrade intraday and the stock turns around and starts going red, that's my sell signal. That's okay, this isn't working out, this trade's out. So I would not want to see this go red today if I was trading it from the long side. I don't think it's going to do that. I'm just saying if I was trading it, I'd probably be a buyer at 40.50, 40.60, and probably stop out like under 40 bucks.
WBA, new low for the move yesterday. Took out that 55 even, and boy, oh boy, just continues to trade lower. 54.84 was the close. So man, you got to wait for this to stop going down here. I guess 55, you can look at that as resistance. The close right there was 54.84. Maybe this one, maybe wait another day or two and maybe get a little seller's exhaustion. That is the only reason this thing would rally. 37 million shares traded on the day that it tanked, and boom, 17 million yesterday. So maybe get everyone out of the pool that wants out of the pool, and maybe get a little rebound just from lack of sellers.
You hit the nail on the head. Wait till it stops going down. Everybody wants to be a hero and buy it on the first day and say, okay, well, this is it. This is the capitulatory event, and I'm going to buy this thing. And it's going to come right back. Sometimes they do. The ones that usually come back are the stocks that are in overall uptrends, though, and are dipping. Yeah. This stock was in a downtrend before and is dipping. If you look at CVS and look at the horrible day it had back when it was $70 and opened at 65, was that the earnings event? Spencer, you might be able to look. February 19th or 20th. It's probably the night of the 19th or the morning of the 20th. Was that an earnings event?
I'm looking real quickly.
He's looking at the pro. It's nice thing with the pro, you can grab the stuff pretty fast and look at the history of it. So
February.
Obviously, was it?
Yes, it was earnings.
Okay, so you have precedence here. So 70 to 65. Look, if you were like going to be the hero and say, oh, these lows are going to hold, I'm going to buy the CVS at 65. It went down the next day, and 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 the next day. And then it had a little consolidation day, and then down big again, and then down again, and down again. It was down basically 10 of 11 days following that negative report. So you're being the hero saying it's going to, 65 is too low. The thing's $51 on you, and it never broke trend. It went straight down. So there was no reason to come in there and start buying it because it never even showed you any life. So I hate buying these things and being the hero. And I've lost a lot of money trying to buy these things, being the hero on day one or day two. Because if you get into a CVS scenario and it decides to go down for 10 days in a row, this thing could be in the 40s. So you've got to be careful. I'm not saying it's going to do that, but I don't want to be caught in something like that. So wait till it stops going down. Wait till you get a green candle. Wait till you get some confidence. Either an analyst comes out and upgrades it, or maybe the company itself does a buy or does something to stop it from going down here. But as of right now, there's no way to know that this is not another CVS, and this thing could be at 50 or even worse. So I'm going to wait till it stops going down before I try to be a hero, calling the bottom.
Let's look at one more. Ed Parker's been patient here with XPO Logistics. Very sleepy here, and a long consolidation period after falling off the cliff here from the 110 level, 116.27. You have a solid low at 54.73. I don't know. What's the catalyst here for this one is what I'm asking. really no great technical levels.
The gap,
to
I
lean.
guess. You could argue
Yeah.
going to get into. So I don't know if that was an earnings event too, where it gapped down on the 14th to the 15th, but maybe you get back into that gap. It could close the gap. I mean, it is trending up right now, so it's not, it's not necessarily ugly. The only thing is you're up 10% here in 4 or 5 days. So is it a little bit overdone now too? I think you start getting up over the area where you were yesterday, 56, we'll call the high 56.62. Then you got some room up to like
Yeah.
58. So there's a little gap in there. Maybe you could close that. But I don't know. It's kind of like, I don't see a great setup there either.
Yeah, it cleared 56. When I look at this one, I'm trying to find like, areas of, double tops or double bottoms, and there's not much there. You did have the double top at 56, which you cleared, but you closed at 55.98. So getting back over 56, holding 56 is important. I see a pair of closes. If you don't want to hold out for 54.73, if you're looking this, a pair of closes at the 55.40 area, and that was also yesterday's low. So tough chart on that one. Spencer, we kept you overtime here today. Why don't you wrap things up and preview our final show of the week?
On tomorrow's show, we will be joined by Alan Brockstein, the 420 investor. We'll also get his thoughts ahead of 420 here later in the month. But that'll be it for today's show. If you missed any part, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts. Thanks to our guest, Marc Chaikin. Thanks to all of you in our chats. Please remember all the information from our show is for informational purposes only, not meant to be investing advice. Hope you all have had a good morning. Hope you have a good rest of your day as well. And hope you join us again on Friday. Have a good one.